Hey guys, this is another vid on ZB, starting first on the various time frames and then comparing the ZB weekly chart with the 30-year yield weekly chart, which I think is critical to trading bonds. You have to look at the inverse yield setup, sort of like ES relates to the VIX chart. So, quickly starting on the weekly time frame, the blue channel represents the secular trend. The purple channel represents the cyclical trend, which is over 2 years old now. We've been in a downtrend. And I'll explain more about this when we look at the yield chart, but we are in a critical support zone here. It's sort of equivalent to this one back here. And the question was whether this was all of wave 5 down or whether it's going to subdivide and this is a 1, 2, 3 going down of a fifth wave. They could target 147 or even the lower bound of the channel again around 141. But this, I call it stealth fib support, stealth fib resistance. This is critical support coming in around 149.18. On the daily chart, there's not a lot to say. I mean, we still haven't taken out this prior low. So there does seem to be some support down here. We'll see how it goes. That's all I want to say here. Really, nothing has changed. What I really want to look at is I have a different grid set up. I couldn't fit it in this grid, or I didn't want to fit it in this grid with, let's see, this. So again, weekly ZB on the left, the 30-year Treasury at log scale, and on the right, in Thinkorswim, it's ticker symbol DGS30. This is yields straight from Fred. And, you know, quick technical note, ZB is the CME spec says that it's durations from 15 to 25 years. And it's actually the Ultra Bond future contract. It is longer than 25 years. And so it's not a direct apples to apples comparison here. I mean, you could argue for using the 20-year yield on the right, and I've looked at that, but I think using the 30-year yield and the so-called 30-year bond on the left gives the cleanest signals. And so I'll explain. For example, let's and it's I mean, if you trade ES versus the VIX, it's comparable. So, let's first look at this weekly candle here on 11/29. So we had a channel that was firmly anchored by 3 points, 1, 2, and 3, which can often predict the fourth point of contact, which it did right here. So classical TA worked. We had what looked like an Elliott wave triangle pattern with an overthrow at the apex right here. So that looked like it worked. And we also had a short from highs right here that was dipping into the 618 level and actually had a weekly close above the 618 level. But if you look at this 11/29 candle at the yield chart on the right, you'll see that yields were coming halfway back and trading a traditional long from lows. And so what seems to happen is that ZB will dip into setups. They will appear completely broken, but the related yield setup is trading a traditional measured move perfectly. And so seeing this touch of the 50 on 30-year yield was even more confirmation, in addition to the channel and the triangle pattern and the short from highs, was more confirmation that this was a good sell setup. So that's a good example. Another example of sort of divergences is, we had right in here the contract rollover. There was a squeeze of profit taking at the end of the Q1 contract, and then they marked up the Q2 contract. And we traded intraday above the 618 of this next measured move. And if you look at yields, this was the 228 weekly candle, and here's the 228 weekly candle. Yields came back only 38.2%, while price was dipping into the 618. So yields wasn't really confirming this spike in prices. And this actually looks like it was more related to the rollover event in ZB. Profit taking, positioning, and then new selling. 30-year yields never really confirmed this move up. So that's another example of using yields to see whether a move is real or not. And here's the most important example. I mean, this is a simple long from lows drawn from highs to lows across this wave. And on yields, it's a short drawn from highs to lows. And yields came into this 50% retracement on the 222 candle. You can see the long red tail tailing away. And ZB was already here dipping into the 618 of the same move. Yields went up for 3 more weeks. ZB looks broken, right? ZB is coming down, but ZB touches the stealth fib support level down here, which is more or less equivalent to this resistance zone on yield of the traditional measured move. And so we're in that zone again, just like on yields, we're back in the zone over here. And so, we'll look more. The question is whether this zone is going to hold. Like I said, yield has traded a long from lows and has a valid target up at 279, more or less. Let me take that off. So, I've argued that this is possibly a secular top in bond prices, ZB specifically, for different reasons. And it sounds sort of outrageous when you're looking at price alone because, in theory, price has no upper limit. But it's different when you're looking at yield because yield has 0 as the lower bound. And it looks more reasonable to call this a possible long-term secular low in yields. And so what I want to look at is, starting in 2011, I don't remember what was happening with the Fed at this time, but yields started to go crazy. And we've gone down in a series of measured move shorts. So this initial draw, I'm drawing to this swing low right here. And I think this is some sort of 3-wave correction back into the 618, and then we have a reaction at the target. So I like that draw. And then there's another one right here. We'll talk more about this overthrow. And then we are at the resistance almost of the next in the series. So this is, when I say critical resistance and critical support on bonds, it is because a break of this would break the trend we've been in, right? Popping above this 618, dropping below this stealth support fib support zone on ZB, it is the trend. So, what I want to look at now is counter trends like we may be in right now. So, yields have traded lots of long from low setups that have broken against this long-term channel. For example, here is a long setup that breaks against the channel. Here is another long from lows that breaks against the channel. But when it has room, yields can complete a long from lows to target. for example, here's a counter trend move. It came back and traded resistance, then it traded long from lows, then we're sort of here in the equivalent setup. It traded resistance again, and then it popped through and hit the target. And so when yields pop through the 618, there's an equivalent series on ZB starting in 2011, the 2711 weekly candle. But on ZB, it looks like the measured moves are broken because ZB is not trading a straight 618 retracement. It has reactions and then appears to break, has reactions and then appears to break. ZB is trading the stealth fib support zone that corresponds to the measured move short resistance zone on the 30-year yield. And so looking specifically at this instance where the long from lows popped through the measured move short to capture this target before reversing, what that looked like on ZB is this was the fib stealth support zone, and ZB came below even that. Yields was above its 618, ZB came below the equivalent stealth support zone. So if history wants to repeat, if this long from lows wants to capture its target right here, then what that would look like on ZB is dropping below this stealth zone, and maybe I took that off, capturing the target of this measured move, which would be around 147. And every trader on the planet is or should be aware of this secular channel on the weekly log chart. And you could argue that yield was allowed to pop the 618 line so that price could come to the bottom of the channel this time, and we could have a perfect repeat of that pattern. Or yields, this has room to run to this original channel, which it has not touched in over a decade. So depending on how where yields are going to stop, ZB could, in theory, come down and even capture its 618 target and punch the bottom of this pink channel on its fifth wave, just like it did here on its third wave. So there's some possibilities. We could find support here. We could let yield capture its long target and ZB capture this short target and find support again at the channel before reversing. Or yields could run and we could drop through this channel, underthrow, and just wreck everyone who's trying to buy this channel long. So I hope that's clear, the inverse relationship between 30-year yield and ZB 30-year bonds, and how you need to use yields to confirm or not confirm setups. And I'm almost out of time. The last thing I want to mention is it's funny how looking at something as an inverse can cause something to pop out at you. And what I realized looking at this is that this series of measured move shorts and yield is a pretty clean 5-wave pattern, and I don't have time to parse it. I'm a quick and dirty Elliott wave analyst, but you can argue this is a series of 3-wave moves into an ending diagonal that goes something like 3 down, 3 up, 3 down, 3 up, 3 down, ending diagonal, boom, nearly textbook. So I wouldn't bank on us finding support on ZB or finding resistance here on yield. My money is that we're going to pop through and maybe run for a little bit. That's all I have time for. I hope that's clear. Thanks, guys.